Yo, what's up guys, welcome back again to my YouTube channel guys. Today we'll be looking back on our past trades guys, including USD CHF analysis, which is a before and after, and also UK oil before and after, and then gold, GBP JPY and OTCAT guys. But the analysis will be based on the analysis of USD CHF and GBP JPY guys. So let's continue on GBP JPY, and as you can see here, we are breaking lower lows guys. We are breaking lower lows and mitigating lower highs. As you can see here, it's our lower low. It is our lower low, it was broken, so we have to, after breaking a lower low, we have to mitigate our lower high. So if we want to mitigate the lower high, if you want to buy to that lower high, which is actually counter trend trading, we have to wait for a reversal, which is what just happened here guys. As you can see here, we created a lower low, lower high, and then a lower low. Instead of mitigating this to create another lower low, we broke this lower high here guys and creating a higher high. That is called a change of character. So after creating a change of character, you have to wait guys. Remember, forex is all about waiting. You have to wait for the market to come to your demand zone. How do you identify demand zone? Quasimodo level. So in this case, where is your Quasimodo level? This is your Quasimodo level, and this is your head here. So your entry has to be around the Quasimodo level, as you can see, and our stop loss has to be below the head, which is what just happened here guys. It got into our Quasimodo and then it shifted guys. So at this juncture guys, we have to look for continuation patterns guys. And as you can see here, we already have this high created and this swing created, so we have to wait for the market to break this high here guys, because we already know that we are bullish because the QML has been mitigated, and also we have this inefficiency here guys that has to be filled out guys, because remember, the market always fills up the efficiencies left behind guys, which is actually balancing out guys. The market balances every time guys. So as I said here, we have this high created and we have to break it guys. After we break this high here, let me just do this. You see the high was broken here guys, so our bullish bias has been increased guys. So we have to look for a possible retracement and then selling into that retracement, or waiting for that market to retrace into your order block. So here we have to wait for the market to come to the order block. How do you identify an order block? Again, Quasimodo level. This is our left shoulder, this is our head. And also remember, in most cases, your Quasimodo level has to be in line with in fact, not your Quasimodo level, your rally base rally. Like for instance, this is our Quasimodo level and this is our rally base rally. This rally base rally is inside your Quasimodo level here. So what I always do is to do this and then create another line here. So this is our rally, it's our base that is closest to our Quasimodo level, or it's actually inside our Quasimodo level here. So this will be my demand zone guys. This is how I actually identify demand zone. I want an institutional candle inside my Quasimodo guys, Quasimodo level guys. So as you can see, when you play this tool, the market will come, it will mitigate and then move all the way to upside. In fact, boom 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 boom. So as you can see here, this was successfully mitigated guys, successfully mitigated guys. So going to USD CHF guys, as you can see, this was one of the hardest pair to trade, because I was actually boxed inside a lot of thoughts here. Like I wanted this to be my my supply zone here, guys. But I was like, okay, but this is not yet mitigated here because this is our shoulder, it's our head. So I wanted the market to come at this QML level before dropping down. So I was like, okay, so this maybe is our FTR failure to retest. So I went, I created this. I marked out my breakout zone here. This is my resistance, and I was like, okay, if this market breaks here, it will come to this level, and most people will look this as our FTR supply, and then they will be taken out. And I was like, so what about this? Because I don't think there will be two FTRs. But even though it happens in most cases, but when I went to 1 hour time frame, guys, that's where I found the solution here, guys. This is our shoulder, guys, and this is our head, and then we have this drop inside our shoulder. I was like, oh my goodness, look at that. This has been mitigated already. So if the market moves up, it has to mitigate this one. Why does it have to mitigate this one? Because it's not yet mitigated. As you can see here, this is our QML. This is our QML, a hit, and then we failed to mitigate this. I was like, okay, so that means this is our FTR and this is our breakout zone, guys. As you can see here, now it makes a lot of sense, guys. We have to take this liquidity, we have to induce buyers and induce buyers here again so that we can mitigate our orders here, which is what actually happened. Let me just go to 4 hour time frame so that it can be a bit more clearer. Yeah, as you can see here, this is what we have now. So this is our supply, this is our liquidity, and this is liquidity. And when you play this tool, you can see that, oh my goodness, it went there and then it reacted same time. So that's what happened. Remember, and look at this candles, guys. This is 4 hour candle movement, guys. Look at that. That is a good trade setup, guys. And another thing, it was a very risky to hold this market, because as you can see here, we have our left shoulder, our head, our left shoulder, a breakout, a neckline. So this is actually a bullish setup. So we can just, you should have just sniped this market and then took your profit even up to this level around your neckline. That will be a lot of money, guys. So that is all, guys. I'll see you in the next video.